You said that the balance sheet normalization may end sooner with a larger balance than previously anticipated. And if I understand it correctly, the ultimate size of the balance sheet will be principally driven by financial institutions' demand for reserves plus a buffer, correct?
That is correct.
Reserves have increased from $43 billion in early 2008 to about $2.8 trillion in 2014, if I understand correctly, before falling now down to about $1.6 trillion currently. Do you have an estimate of the amount of reserves that are estimated to be necessary to achieve the Fed's monetary policy objective, and how does the Fed's post-crisis regulatory policy affect this amount?
The quantity of reserves before the financial crisis, Mr. Chairman, was $20 billion in that range, plus or minus, so a relatively small amount. One of the important things we did after the financial crisis was require banking institutions, particularly the very largest ones, to hold quite large buffers of highly liquid assets. One of those assets that the banks like to hold to satisfy those requirements is bank reserves. So the demand for reserves is going to be very substantially higher than it was before the crisis and will not go back to those lower levels in any case. We only have estimates based on market intelligence and discussions with financial institutions, and those estimates have actually gone up substantially just over the course of the last year or so. We don't have a precise notion, but we believe that the public estimates that are out there of around $1 trillion plus a buffer, as you mentioned in your remarks, is a reasonable starting point, an estimate of where we might wind up.